Hey YouTube, what's happening? Chris here. I want to bring you all an update on Bitcoin. Right now we're at $5,018. We're down 2.81%. So guys, I want to give you some of my targets here, some of the key areas that I was looking at, and some of the things I'm seeing. Bring it to your attention, show you the upside, the downside, and the sideways, and you do what you want with it. Remember, I'm not your financial advisor. I'm just here to help out the best I can, show you what I'm seeing. Remember guys, I'm not a professional here, and just trying to do my best. So what we're going to dig into, guys, is Bitcoin right now. We're going to have to see if we hold this $5,000. Right now, we're starting to drop even farther. As you can see, we're at 5,001. There's 5,000. And we're going to see how much lower we go here. But one of the key indicators that I want to show you was the MACD. And you see how we're starting to have that downward cross now, and the histogram starting to tick to the negative. So I want you to pay attention to that. Yes, MACD is a lagging indicator and is taking into factor this move right here. But guys, this is a spot that you have to pay attention for that sell-off. And what you're also seeing here is a shooting star candle at the top here. At this very top, after we've been pushing up, we got up to, what was it guys, 90 or 93, something like that on the RSI, something crazy on the 1 day for Bitcoin. We'll check that out later. But you know, when you see those things happen, and then you see the shooting star here, and you're also getting this MACD cross, now we're starting to have that downside action. And some of the targets that I'm looking at here to the downside, we're going to see if we get a bounce off this 20-day EMA, which has been pretty consistent for support for a while, and that's going to be at 48.27. If we do not see a bounce there, I'd look to that 200-day moving average at $4,527. And guys, we haven't properly back tested the 200-day moving average. We broke through it on this one big candle, and then we floated up a little bit higher, put in this shooting star candle, and we have not back tested this. So that's a key area as well at 45.27 that I'm going to be looking at to see if that's a good spot to go long. And then ultimately I'm looking at this green box that I have here that's roughly from the top of it around 4,400 down to about that 4,200 or so. That's the key area. Even if we came back down into this and consolidated on it for a while, that's still healthy. That's okay. We just don't want to start having breaks and drops below this 50 moving average and this 100-day moving average. Then things can really fall fast, as you know, in this space. I mean, you can move $1,000 to the upside or the downside. By the time it takes you to go take a shower or whatever, you can come back and the whole market has changed. So that's where you got to pay attention to this market and realize it's for real, unregulated, and it's the wild, wild west. So it can do whatever it wants. But just technically looking at it with classical technical analysis, these are the areas that I would look at for support. Okay, so say we do find support off this 20 EMA here and we bounce to the upside, we would need to try to get back over top of this 55, 54. Then we go up and test around that 6,000. But I don't feel like we're there yet, guys. I feel like we still need more. You got to think of this like a spring. You feel like we need it to coil back a little bit more down into maybe this 200-day moving average. And if we got to bounce off that with volume that look like this, we're in the bull market, in my opinion. Right now, we're still sitting and we're waiting. We're just being very patient and waiting. We're at that spot in the bear market where it's that transition period, and we have to have more confirmations, in my opinion. We are in an intermediate term uptrend, which is great, but we want to turn that into that longer term uptrend, and we just need a few more confirmations, some different things, like getting really good support off this 200-day moving average. If all of a sudden we got a massive candle breaking down through this, guys, and we lost $1,000 through this 200-day moving average, we may come down here and test this bottom and see if we could pull off a double bottom around that 3,100. That's what I'm paying very close attention to right now. First, it's at 20. So guys, downside target's 20 EMA. Then 200 moving average, then this green box. That's what I'm paying close attention to. And to the upside, it's getting over this shooting star candle and up past this white line at 55, 54. Then we could definitely run up here and try to test around that $6,000 range. And that $6,000 was in play for quite a long time. So it's going to be strong overhead resistance most likely, unless the market makers just say, hey, everyone thinks it's going to be strong overhead resistance. We're going to blow right through this. But then again, great stuff, because we're moving even farther in that bull market and that new cycle, that new market that would be coming to play. So guys, think of the MACD here. Take a look at it. You see that cross, histograms ticking to the downside. We're also seeing a potential lower close today that I want you to pay attention to as well. Let's take a quick look at the RSI and see how high we ended up getting up to when we made that really nice run on that candle. So look how high our RSI got. Guys, it's just not sustainable, and that's professional traders who are taking profits right up there. But we ended up getting to around that 91, 92, and now we're just starting to dive back down. You can see we still are pointing down, so we're going to have to see if we find support probably around at the 50 range on the RSI, which would be good, and that maybe would pull us back onto that 200-day moving average. So keep that RSI in mind, guys. We're at 62 now. Nothing can stay up in that overbought territory for a long time, and that's what people, some of the hodlers or this or that, people who really don't study the charts, they need to realize that there has to be breathing periods in the charts. You blast up, there has to be a retracement. Same thing if you fall super hard. Guys, we had this super fall hard here. Now we're making it up on the backside, and that's just how the game's played. But I'm paying very close attention to the candle today. I want to see what happens, where we close at. If we start getting closes, down below that 20 EMA, then I would definitely look down to that 200-day moving average is what I'd pay attention to. And another thing I wanted to show you is with the Fibonacci. So you remember a few videos back we were talking about that 0.618 for the retracements or the reactions, and that's where a lot of profit taking happens. And this was basically to the T, guys. We actually got up above it a little bit. We wicked all the way up through to the middle between the 0.618 and 0.786, and then that's where the profit started to be taken. And remember how we were looking back at the charts, and that was pretty consistent, guys. And for you who weren't here with me, I want to show it to you. So here was that 0.618. That's why people were taking profits right there, kind of that golden area. Now take a look at this. And this is why I like to back test things. Let's see here if my chart will catch up. Alright, so we'll just take one right here. Guys, I believe this was one. So we'll go from our high right there. We'll take it down to low. And guys, I have my magnet on. I'm going to have to get that off quick. 1 second. Trying to grab everything. There we go. Okay. So with this Fibonacci, right up in here, just go roughly down to here. And look right here, guys, that's 0.618. And then you start to fall back down. Let's do another one. And this stuff I like to show people just so you can kind of go, oh yeah, you know what, we maybe should take some profits. Even if it goes higher, you're not really going to miss out. Let's go from this top right here. Look right here, guys. 0.618 shooting star candle up about middle of the road there, and then a big sell-off. So that's what I'm saying, just be careful. You got to be careful during these times because history likes to repeat itself and everything. And, just like this, how we knew kind of to take profits once we got to that 0.618 with that shooting star candle. You got to go back and look through your history and put history on your side. Things aren't always going to play out like that, but if you have, past data and recollection, then it helps you out. It's only going to help you out. So, guys, that's what I was looking at, and I also want to point out one more thing. So, also remember when we have these big pumps on huge volume, so this is on the 1 day, I start counting how many days we actually got pushed up and we got overextended, how long we can stay in that region. I'm going to mark this down, so next time we do have one of these $1,000 pumps to the upside or downside, roughly I'll know how many days that we traveled up. And this was, we had the first day was a pump here, then it was 1, 2, 3, 4, 5, 6, 7, about 8 days onto that shooting star candle, and then we're starting to have that slow pullback right now, but we're going to have to see what happens. So, write that down. Say, guys, last time $1,000, pump for 8 days, and then that's a potential area you could open a short, if things are looking right. But that's just the way I do it. Remember, I'm not your financial advisor. Here to help you out the best I can, guys, but just pay attention to some of these things, the volume, the candles, all that type of stuff. So we'll have to see what happens. Right now we're trying to defend still that $5,000. We're at $5,022. Take care, my friends.